Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is May 6th, 2025, and we're diving into Duke Energy's first quarter 2025 earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Duke Energy has had a strong start to the year, and I'm excited to discuss their performance and future outlook.
Revenue and profitability overview. Let's start with the top line. Duke Energy reported total operating revenues of $8.25 billion for the first quarter of 2025, up from $7.67 billion in the same period last year. John, what are the key drivers behind this revenue growth?
The revenue growth of 7.5% year-over-year was primarily driven by higher retail sales volumes and the implementation of new rates and riders. Additionally, improved weather conditions contributed to increased energy demand, particularly in the electric utilities and infrastructure segment.
And what about profitability? How did Duke Energy perform in terms of earnings per share?
Duke Energy reported an adjusted EPS of $1.76, which is a significant increase from $1.44 in the first quarter of 2024. This 22.2% growth in EPS was supported by the same factors driving revenue growth, although it was partially offset by higher interest and O&M expenses.
Segment performance. Let's delve into the segment performance. How did Duke Energy's different business segments fare this quarter?
The electric utilities and infrastructure segment reported an income of $1.28 billion, up from $1.2 billion last year. This was largely due to higher retail sales volumes and new rate implementations. The gas utilities and infrastructure segment also saw an increase, with income rising to $349 million from $284 million, driven by rate increases.
And what about the other segment?
The other segment, which includes interest expenses on holding company debt and other unallocated corporate costs, reported a loss of $260 million, compared to a loss of $203 million in the previous year. This was primarily due to higher interest expenses and lower returns on investments.
Operational efficiencies and future outlook. John, can you talk about Duke Energy's operational efficiencies and their future outlook?
Absolutely. Duke Energy's effective tax rate decreased to 12.1% from 13.4% last year, thanks to increased amortization of income tax credits. Looking ahead, the company reaffirmed its 2025 adjusted EPS guidance range of $6.07 to $6.42 and expects a long-term EPS growth rate of 5 to 7% through 2029. This indicates strong confidence in their strategic initiatives and operational efficiencies.
That's promising. How does the company plan to achieve these growth targets?
Duke Energy is focusing on advancing new generation projects to meet growing energy demand, investing in grid modernization, and expanding their renewable energy portfolio. These initiatives are expected to drive sustainable growth and enhance customer reliability and value.
CEO's perspective. Let's hear from Duke Energy's leadership. What did CEO Harry Sideris have to say about the company's performance?
CEO Harry Sideris expressed pride in the company's strong first quarter performance, attributing it to constructive regulatory outcomes achieved over the years. He emphasized that the fundamentals of the company are stronger than ever, positioning Duke Energy well to meet the growing and evolving energy demands of their customers.
It's always insightful to hear directly from the leadership. It seems like Duke Energy is on a solid path forward.
Indeed, their strategic focus and operational execution are key to their continued success.
EPS forecast and market reaction. John, let's discuss the EPS forecast and how the market reacted to Duke Energy's earnings report.
Analysts had forecasted an EPS of $1.59 based on a survey of 4 analysts. Duke Energy exceeded these expectations with an actual adjusted EPS of $1.76. This beat in expectations likely contributed to a positive market reaction, as it demonstrates the company's ability to deliver strong financial performance despite challenges.
Exceeding analyst expectations is always a good sign. How do you think this will impact investor sentiment?
Beating EPS forecasts generally boosts investor confidence, as it suggests that the company is effectively managing its operations and financials. This positive sentiment could lead to increased interest from investors looking for stable and growing returns.
Key takeaways. As we wrap up, Duke Energy has delivered a strong first quarter performance with significant revenue and EPS growth. Their strategic initiatives and operational efficiencies are paving the way for future success. John, any final thoughts?
Duke Energy's ability to exceed EPS expectations and maintain strong guidance is commendable. Their focus on grid modernization and renewable energy positions them well for long-term growth. Investors should keep an eye on their progress in these areas.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Duke Energy's performance in the comments below.